Anthony, I think this gets at the big issue. The number one problem every investor in the world is facing right now, and there's $250 trillion or more worth of this problem, is I have monetary energy and I need to, where's my store of value? How am I going to conserve my monetary energy in the current macroeconomic climate? As long as the central banks are expanding the broad money supply, M2 expanded by 5.5% a year for 10 years. This year it expanded by 24%. If the monetary supply expands by 10 to 15% a year for the next 3 to 4 years, the banks are sucking the oxygen out of the room. They're sucking 10 to 15% of the purchasing power from all of your investments. And the question is, if I'm holding cash and I have 500 million in cash and I'm looking at losing 15% of the purchasing power every year for 5 years, the risk was I'm going to lose 75% if I do nothing. Okay. It made it easy for me to take another decision because I expected that doing nothing with money, with cash, is losing half to 75% of your purchasing power. But it's not a problem if the money supply is not expanding, right? The expansion of the monetary supply is like I'm sucking 5% of the oxygen out of your room every year or every month. How long will it be before you leave?
Michael Saylor, often regarded as the Bitcoin king, draws parallels between the current Bitcoin opportunity and a significant moment he identified in the early 2000s. Saylor's credibility goes beyond mere talk. He substantiates his insights by citing his successful early investments in tech giants like Apple, Amazon, Facebook, and Google. Profiting over $500 million from the rise of the mobile phone and the internet, Saylor demonstrated a keen eye for substantial opportunities. In his book, The Mobile Wave, Saylor shared his conviction in early tech companies, attempting to persuade investors that it was a monumental opportunity, a stance that proved highly lucrative. Now, he asserts that Bitcoin represents an even greater opportunity, labeling it the most significant of his lifetime. In the interview, Saylor not only reflects on his past success with the mobile wave but also elucidates why Bitcoin stands as a comparable, if not superior, opportunity. The video concludes with Saylor outlining why, in his view, Bitcoin is the only logical investment.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
In 2007, Apple came forward with the iPhone, but it was a toy. There was no cut and paste. There was no app store. By 2009, the iPhone 3 was not a toy anymore. It was a business tool. I became enamored with the idea of software leaping off of a computer onto a handset. And I thought, when software goes from solid state to vapor state, and now it's around us and with us, and we sleep with it 24/7, 365, maybe it means something different. And so when I wrote The Mobile Wave, the observation was software networks are dematerializing everything in the world. They're dematerializing money and identity and everything you can hold in your hand, the photograph and the camera and the recorder and the video if software dematerializes everything, then I can take a map from Rand McNally and make it a magic map. And Google Maps is a magic map. It tells you where to drive, how to drive, whether you should go there, the directions to take. And it's in the palm of your hand. It even talks to you. And Rand McNally was a simple 20th century map. Rand McNally's worth $50 million. Google Maps is worth $50 billion. Apple dematerialized Kodak, maybe Instagram did, and you went from taking photos on a Canon camera and storing them in a shoebox or a photo album to Facebook and Instagram and the iPhone, and it wasn't worth the same. It wasn't worth 10 times as much. It was worth 1,000 times as much. So the conclusion of the mobile wave was the world's going to change. The networks, Google's an information network, Facebook's a social network, Apple's a mobile network, Amazon's a retail network. They're going to eat the world, and they're going to destroy 15,000 other companies that are competing with them because Apple's able to ship a better camera to 1 billion people overnight for a nickel. And nobody in the history of the world could ever upgrade or ship a product for no variable cost to the entire planet for a nickel. And yet that's what Google does, that's what Facebook does, that's what Apple does. And that's the part of Amazon that works well, is that dematerialization of the retail storefront to 1 billion people for a nickel. Well, The conclusion is buy Apple, Amazon, Facebook, Google. I wrote the book. Anthony, nobody read the book. 8 years later. When I wrote the book, probably 50 or 100,000 people read the book. I made 50,000 in royalties from the book. I didn't invest my company into Apple, Amazon, Facebook, and Google. I took 50 million of my own money. I bought it. I bought it when everybody said, you're foolish to own Apple. You should diversify into all the other computer companies. What is this Facebook thing? You're foolish to own that. What is this Google thing? It's overvalued. It's overpriced. Well, I converted the 50 million into 500 million. And, anybody could have done it. If you had bought any of those companies in the past decade, you couldn't lose money. So it made me conclude a couple of things. One thing, if you want to make money in the tech era, you find the dominant digital network, the one that's worth 100 billion, that's crushed everybody. You can't buy MySpace. You can't buy you might hit BlackBerry or MySpace or Yahoo, or something like that. If you buy too soon, you might miss it. But after it's $100 billion and the market is decided, Apple's the winner, Google's the winner, Facebook's the winner, Amazon's the winner. And it was pretty obvious Amazon was the winner in 2013 when it was trading at $300, Anthony. Yeah. It was, by the way, everybody on Wall Street said, what is this stupid company? They don't make any money. We don't buy into it. And they would sell you Amazon for $300. But you could have bought it. You could buy all those things and you would have got a 10x, 20x gain on it. And you just wait until the 99% of the world that disagrees with you, that's cynical and skeptical and ignorant, and they don't understand it and they're afraid of it, as it gradually dawns on them that Google's an information network, Facebook's a social network, Apple's a mobile network, Amazon's a retail network, Microsoft's an enterprise software network. When you finally figure it out, you're like, oh, these guys can serve up 1 billion people for a nickel. Their variable cost is zero. They've got overwhelming, crushing advantages. So, summary of the mobile wave. I had that experience. It made me very successful as a personal investor. My company didn't invest in it. 2020 came, and I swore to myself, if I ever saw this again, I wasn't going to write a book. I was going to buy as much of that thing as I could personally, as much of that thing as I could corporately, and then I was just going to tweet about it. And so that's basically the tie-in, or what leads us up to the virtual wave and my interest in Bitcoin. Now, what do I do with that? Well, I got to find a store of value. A bond is only a store of value if the coupon is higher than the rate of monetary expansion, unless I have expectation that the interest rate will fall. So a 5% bond can work as long as you keep cranking down the interest rates. But when interest rates get to zero, unless you go negative, bonds don't hold value. Everybody in the bond market has figured this out. Either interest rates go negative or you got to exit. Now, how about stocks? Stock can hold value if the cash flow per share grows faster than the rate of monetary expansion. Google, Amazon, Facebook, they work in the last decade because they're growing 20% and the money supply is expanding 5%. But if the money supply expands by 15%, how many equities are going to expand cash flow per share by 20%? By the way, how do you do that if you're not? You have to leverage up, right? So if I'm growing 5% a year cash flows, I have to borrow money. I go short the dollar. I borrow billions. I buy my stock back. My cash flow per share goes above the hurdle rate, and I can hold value. If you don't actually, by the way, what happens when you're fully leveraged up, Anthony? Everybody's at the end of the line. I've leveraged up as far as I can go. Interest rates are as low as they can go. How many companies are going to grow their cash flow greater than the rate of monetary expansion? Well, you crank in your estimate for money supply. Bonds are a problem. Stocks are a problem. Cash is a problem. Now you got to go to precious metals. Am I going to buy gold? The miners are going to create 2-3% more gold every year. People, the gold supply is centralized. There's counterparty risks. The central bankers hypothecate it and create gold derivatives. There's no scarcity with gold. Under the best case, in 100 years, you're going to lose 85% of your money when they just print 2% more gold a year. Under the worst case, you're going to lose it all from a counterparty risk. And in the mid case, You're going to lose 90%, 95% because people keep generating gold derivatives. This is why gold is breaking down against the Fed balance sheet. You can see it breaking down on the charts this year. It's not working. If gold goes to $100,000 an ounce, gold miners are going to frack gold like there's no tomorrow. It's a commodity. And commodities make awful money because human beings can create more. So you work your way through bonds, stocks, and gold. What's left? Crypto. Find a digital asset you can't print more of. Well, there's 6,500 choices. There's one that's the winner. It turns out that the winner is the one that no company controls, no country controls. It's capped at 21 million. And because it's 21 million, what do you have here, Anthony? You have a software network engineered to collect, store, and channel monetary energy without power loss. It's like Facebook for money or eBay for money, but here's the difference. It takes you 30 years to buy everything you're ever going to buy on eBay. The reason eBay works is because it has all the liquidity of stuff you might buy, but it takes you 30 years to buy it. Bitcoin is a savings network. It's a monetary network. If you're a billionaire, you put $1 billion on the network, you put it on the network in a week. I bought $600 million worth of this stuff in a quarter, Anthony. I put 20 years of earnings into the network up front because as soon as you figure it out, you realize that it's going to be the highest real return, versus all the alternatives. And do I want to have my money sitting in a fiat instrument, which is a bond or a stock that's going to be debased by expansion of the money supply? Or do I want to put it into an absolutely scarce digital asset, which is going to float with the expansion of the monetary supply?
Are you worried about the volatility?
And so we're going through a transition where people aren't sure what this is. I think it's a moral imperative to stand up and say to people, it's a good thing. It's a thing that's going to make the world better for billions of people that don't have a choice. And, if you're going to criticize Bitcoin, what are you going to do to solve the problems of everybody on the planet that doesn't have liquid wealth and hedge funds in the United States with options? Because it's morally incumbent upon you to give them something to cling to in the event of a currency flood. So the reason we're talking about it is because it's the right thing to do for the world. As for what I think going forward, I think that if your choice is invest your money in bonds that are going to yield 2% while the monetary supply expands by 15%, you're looking at minus 13% real yield as if you're calculating asset inflation, right? So that doesn't make any sense. If I'm going to put my money into equities, I'm going to gamble. I've got to rebalance my equity portfolio every quarter based upon performance and competition and a million moving parts. That doesn't make sense. If I leave my money in cash fiat currency and I know that all the banks are going to print 10 or 20% more every year, that doesn't make sense. So the idea of adopting the Bitcoin standard is very simple. I'm going to sweep my excess cash flows into a savings bank in cyberspace that's run by incorruptible software that has no agenda other than to just store my value for 100 years. That's it. There's no CEO of Bitcoin. No one can print more Bitcoin. No one can use Bitcoin to do an acquisition or a dilutive acquisition. No one can debase the Bitcoin. It's a very simple idea. Take your monetary energy, encrypt it into a cyberspace bank that's going to hold it in a vacuum where the power won't bleed off, and then wait. Because in a world where everybody's dissipating energy, John, the rational strategy is preserve your energy. Everybody else is dissipating energy either by trading around or by holding bonds that can't keep up with the real rate of monetary expansion, or by taking risks. What am I going to do? Buy $500 million worth of liquid art indexes? Scarce art index? What am I, it's
baseball cards?
Put yourself in the place of someone that drives a truck for a living. what advice are you going to give them? Right? Because it's like my 82-year-old father, he can't be a hedge fund guy. He can't be picking stocks to buy and sell in a balanced portfolio with exposure to developing countries and with currency hedges on, and is he going to short the 30-year bond and it'll play the yield? It's too complicated. There's billions and billions of people. They just have money and they want to not lose their money. And so that's our strategy. We're just going to try to preserve our money, and we're going to do it by betting on the only obvious thing we can find in the world that is not correlate. Everything else is for the most part a fiat instrument, and if the monetary supply expands, it's going to be diluted. So you either got to buy the only Picasso, or you got to buy scarce art or scarce things that cannot be produced, or you buy Bitcoin, because Bitcoin is that scarce crypto asset that's got hundreds of billions of dollars behind it.
Michael Saylor, hailed as the king of Bitcoin, passionately articulates the monumental opportunity he perceives within the realm of this cryptocurrency. His credibility is underscored by a history of early and lucrative investments in tech giants like Apple, Amazon, Facebook, and Google. Saylor's ability to identify and capitalize on transformative trends, evident in his earlier recognition of the mobile and internet waves as detailed in his book The Mobile Wave, has now pivoted to an even grander scale with Bitcoin. Saylor sees Bitcoin not merely as an investment but as the greatest opportunity of his lifetime. He draws parallels between the current state of Bitcoin and the early days of the internet and mobile technology, positioning this cryptocurrency as the next transformative wave. His perspective emphasizes the profound impact he believes Bitcoin can have, akin to the groundbreaking moments he navigated in the tech industry. In this narrative, Saylor unfolds the story of how Bitcoin represents a continuation of his historical success in identifying and embracing technological shifts. The video captures his conviction that the opportunities embedded in Bitcoin mirror the transformative forces he experienced in the earlier phases of the tech landscape. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.